Hey everybody, it's Larry Berman here. Another long week. Had a good start to the week this week. We were live from the ETF conference in South Beach, and talked to a lot of new ETF product issuers this week. So what's new in the ETF industry? The answer is not much. But what you're seeing more and more of is active strategies moving into ETF wrappers. So, no new ideas in terms of investing, but alternative ways of getting outcomes is really the biggest growth area. Obviously, with the Bitcoin ETF just out, that was a big presence at the conference as well. When you think about technology and artificial intelligence, obviously that was a big item. Just about every speaker who presented, when had the opportunity to being asked a question, there was something related to AI. So had a little graphic cross my desk earlier today and thought it would be interesting to share with you. So you can check on Google and ask for historical reference to certain types of searches. Sometimes you'd put the word inflation in, sometimes you'd put Federal Reserve, whatever it happens to be. Anyways, in this example, call options. And so when we think about what's going on in the markets now, you can see what's kind of happening here. And the joke kind of around this was, how do I make money quick? We all know, if we look at the major averages, it's not a secret that a handful of stocks have been doing the heavy lifting. And while we saw a little bit of broadening out of the tape this week, most of the gains were still very, very narrow. So average stock on the year remains flat to down, with just a small handful of stocks doing all the lifting. And of course, it is artificial intelligence that is leading the charge. So let's have a look into the chart room and see if we learned anything new this week. We featured this ETF before on the weekly webinar here, YouTube hit, whatever you want to call it, I don't know. It's options expiry day today. I'm exhausted. It's by far the busiest day of the month. QL Partners, probably one of the biggest option players in Canada, with what we do in portfolios for clients. Anyways, AI2 ETF, if we run back a couple of years here, you can see where it started, and obviously post-COVID, the thing just ripped. And we got to the highs at the end of 2021, and all will know 2022 was a terrible year for everything bubblicious and inflated. So we're now back to those levels. When you look at the NASDAQ, it's made a new high. When you look at the S&P 500, it's made a new high. It's led by those huge market cap weighted names. But when you look at the sector, and all the names that have a relationship to artificial intelligence, we have not broken out yet. We're back against the highs. Obviously, NVIDIA and a handful of their friends are ripping higher and making new highs. But the average stock impacted by AI, or expected to be impacted by AI, is now up against this area. And it'd be very interesting in the coming weeks to see if there's any follow through. What we're seeing technically, okay, this is called a negative divergence. We've got a higher high in price. We've got a higher high in price, and we've got a lower high in terms of price here. And so that, it's meaningful. It really is an important divergence in a very important sector. Friday, earlier in the week on the CPI, big reversal. Friday on the PPI, big reversal. Obviously, market tried to make a new high and couldn't. So is this the high, or a high, and we start seeing a pullback? Because so far, with bond yields pushing up on these renewed inflationary concerns in recent weeks and months, And all the talk now that's coming to the forefront, Jeff Dunlock spoke at the conference this week and reeled on the absolute catastrophic fiscal situation the U.S. is in. A lot of talk this week in the media about the debt ceiling. So is that going to matter, or does AI just trump everything and nobody cares and just, buy on? So it'll be an interesting couple of weeks here. I suspect we should get a pullback. For those of you who want to participate and have not yet, I would wait. But again, I've been looking pretty silly in the last few months, telling people to be cautious here with AI lifting a very few boats, but certainly the market overall. What do I like now to buy, and what did I add to this week? Precious metals. I think the setup is we're coming closer. We're not there yet. Bond yields are going to push high. Sector's going to come down. We heard Larry Summers today say that we might get a rate hike before we get a rate cut. Anyways, the market has successfully pushed back on rate cut expectations from what was 6 only a few weeks ago back towards 3. This sector, when the Fed does start to cut, and they will rip, and we'll see a rally at least back to the mid-30s, where I'm most likely going to be a seller again, unless gold stocks really start to outperform. They're at 30-year low valuations. The cash cost on pulling it outside of the ground is, these companies are profitable today. So it's really mind-numbing why it's not being recognized yet, but it'll come. And this is where you look if you're a value type investor. For me, gold's not something, or gold stocks, that you want to have in your portfolio all the time. But because they're very uncorrelated with markets overall, they're a very, very interesting asset class to include in portfolios. Again, I'm not a gold bug. I've been a seller of gold in general for months now, but the time is here where we really start to look at the risk reward here. So not only did I add to some gold exposures this week, we add to some silver names, and we actually wrote or looking to write more puts on GDX in the next 6 months to accumulate even more of a position should we get filled with our March order, which was at 28. So looking to write 23s, build that long position in these, setting up for what should be a great rally into 2025. Anyways, that's all we have this week. Have a great one, everyone.